Good morning, and thank you for joining the Cannon Resources Investor Webinar. Today, I'm joined by Cannon's Chairman, Alex Passmore, and our Company Secretary, Chris Hunt, who'll provide a company update as well as provide background on the recent offer. We will run through a Q&A session following the update. So to ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. Alex, I'll pass on to you.
Great, thank you, Jane, and good morning all. So I'll get into the detail of the offer in a second, but I just want to offer some highlights from Cannon over the past 12 months. So following a really successful listing in August 2021, Cannon successfully raised money and gained significant market attention. Then went out drilling at the Fisher East nickel project very successfully and increased the resource base there from 76,000 tonnes of contained nickel metal to 134,000 tonnes of contained nickel metal, and that was driven by the discovery of Sabre and really strong extensions to Muscat. So very much a successful exploration campaign. Unfortunately, I guess more broadly in the market, Russia invaded Ukraine in February 2022, and there was a very brutal market sell-off in May onwards, with the small caps and interest in the small caps just completely dried up, and so Cannon wasn't getting the market rating for its high value project and its exploration wins. So that valuation gap and lack of momentum in the market, and particularly over the past 6 months, has created an opportunity for people to look at Cannon from a corporate point of view. So that then, I guess, culminated in Kinterra Battery Metals Fund launching their offer for Cannon Resources, and they launched their offer on the 8th of November, and it's an all-cash offer at 45 cents per share. So that values the company at around $45 million once you take into account the options that will fold into that offer. So Kinterra are a Toronto-based battery metals fund run by a very technical group, also a well-funded capital markets group. Up there, they've got a long track record in a variety of funds before Kinterra. They own mines. They own mines in Nevada. They own mines in South America in their separate fund. So a very capable group, and obviously well funded to put a certain solid cash offer on the table. So in terms of the offer, I'll just run through a few key dates. So yeah, it opened on the 8th of November. It closes on the 21st of December. It's all cash. It's made by Cadallion Nickel, which is a subsidiary of the Kinterra Battery Metals Fund. The bidder statement and target statement have been lodged, and so you should all receive those in the mail and/or via email. And there's minimal conditionality with Kinterra's bid, so a 50.1 minimum acceptance condition. So what choices do Cannon shareholders have? Well, you can accept the offer, and there's instructions that we've released to the market, and that's via our registry, Automic, and you need to have your shareholding details ready with you when you're doing that, or you could sit back and wait for to see how everything plays out, or you could stay a relatively minority shareholder in Cannon. And all of those details are explained in the target statement and the bidder statement. So I won't go through them all in detail here. The directors have recommended that shareholders accept the offer in the absence of a superior proposal. So superior proposals can emerge. With a 50.1% minimum acceptance, that probably reduces the likelihood of that happening, I suppose, and that may have played into the reasons why Kinterra chose to structure it that way. I should say you can accept the offer. We're recommending to accept the offer. There's also, the option of selling into the market at or around the offer price. Now, why do directors recommending the offer in the absence of a superior proposal? Well, the company traded for the last 6 months at around 20 to 30 cents, so around a market cap of around $25 million. And when we look at the tasks ahead and the substantial amount of capital that's going to be invested into the project from here, so that's to get inferred into indicated, follow up with studies. It's tens of millions of dollars in the next few years, and sitting there as a 25 million market cap enterprise, you can see significant dilution. Now, that's where a $45 million cash offer, without that future dilution, has to be looked at. And so, on that basis and on the basis of strong market premiums, the directors recommend that you accept the offer in the absence of a superior proposal. So there are further details in the target statement and the bidder statement, so I'd encourage you to read those. I'd just note that the offer is open. We'll be closing in December unless extended, which Kinterra do have the option to do. There's very little cost to shareholders in terms of brokerage or stamp duty on the offer. And I guess that's the key highlight. So with that, I'll hand back to Jane, and we can look at some questions.
Thank you, Alex. Thanks for that update. And again, if we do have any webinar attendees that do have questions, I encourage you to use the Q&A function down at the bottom of your screen. We've had a few come through though, Alex, I'll jump into it. So a question is, why or should they accept the offer of 45 cents when they've paid a premium to that particular price?
Yeah, so in late 2021 and early 22, but for a short period of time, for about a month, the share price was, above the bid price. Now, when you're looking at these things in the market, you don't reference all-time highs or peaks in the market. The market is changing. It's taking into account factors like war in Ukraine, what's happening in the nickel market, what the equity market conditions are like. So the look back that most M&A transactions have is about 6 months. So you can take into account the current market conditions. And so generally a bidder is not going to look back any further than that. So in terms of the premiums that that are being offered by Kinterra, they're a substantial premium to the last 6 months, and a substantial premium to the closing price. So there's 43% above the closing price of Cannon shares, and 58% premium to the 30-day VWAP.
Alex, just another one. So if the bidder declares the offer unconditional before the date that the offer is due to close, will they accelerate payment terms to shareholders who have accepted into the offer by that time the offer is declared unconditional? Sorry, that was quite a long one.
So that is open to them, and you quite often see that in these situations to encourage shareholders to accept. Kinterra hasn't outlined their intentions in that regard yet, but that is an option that they can take.
Thank you. Then another one's just popped up. So was a formal sale process run, or was it Kinterra's offer unsolicited?
Kinterra's offer was unsolicited, and there was, the directors then, we're aware that there was, that there was several interested parties, and so they were all circled back to as well. But once you sign a binding implementation agreement, bid implementation agreement, there's no shop, no talk, and from that point on, you're walking forward with Kinterra. But yes, the market was tested.
Just another one from Matt. Has Cannon received any competing or superior proposals as at today?
No.
Okay, Don, we've got another question. So what would the outlook be like for shareholders who retain shares?
So that's got the Kinterra bidders statement goes through that in detail, what their intentions would be. And there's a variety of outcomes there. So, if Kinterra achieve 50.1, the bid goes unconditional, and then people could, people then start receiving cash for their shareholdings, the ones that accept. At that point, in terms of the other shareholders, they can hang on, but it's open to a majority shareholder that owns over 50%. The board can change, strategy can change, capital raisings can be determined. So you do see it from time to time where minority shareholders stay in alongside a major shareholder. I can think of quite a few transactions where that has happened. So that is open to shareholders if they want to stay there alongside Kinterra, but it will be that they will be in a minority position.
Another question just popped up. So is our understanding correct that ROX will only submit their acceptance once the bidders show acceptance of 45%?
Yeah, so ROX's 10% holding in Canon is subject to ASX escrow provisions. So it's not able to accept until the offer essentially goes unconditional. And ROX has announced what its intentions are, and that is that once more than half of the shareholders that aren't escrowed, i.e. 90%, so half of 90% means 45, accept, then ROX's intention is to accept as well.
Wonderful. Well, gentlemen, it looks like those are all the questions that we do have that have come through. If we do have webinar attendees on the call, though, who have missed anything, please feel free to send the questions through the contact details on the bottom of our ASX releases. But thank you for your time today.
Thank you, Joan.
Thanks, Jane.